Welcome to the 10th and 11th day of trading this Apex Trader funded account, where I'm trading with Apex's money and keeping most of the profits and none of the losses. As of Thursday morning, the account was at 49,774, about 1,400 away from the trailing liquidation threshold. I actually started messing around with smaller scalping strategies Thursday morning to try to market order into large moves, but decided that overall it's just too risky because I found myself getting caught chopping around within candlesticks too often. I basically broke even after this experiment, and I won't be exploring this strategy anymore, so won't be showing these trades. After bouncing off another demand zone, I saw buying momentum pick up late in the afternoon. There was heavy bullish divergence on the accumulation distribution line. AD was making higher highs, and price was making lower highs. I set a limit buy at 39.89, right around the 21 EMA on the 5-minute chart, to try to follow the trend on a retracement. I saw that the volume point of control could also act as support here. Sure enough, price retraces down and I get filled. I'm actually so confident in bulls here that I set another limit buy at 39.86, which is right by the 21 EMA on the 15-minute chart. I see price immediately start shooting upwards and it increased my take profit level due to how strong the buyers looked here. Unfortunately, I get spooked by a large red candle that actually created some bearish divergence on AD. AD was making lower lows when price was making higher lows, and I end up cutting the trade short for a small $100 profit. Kinda wish I just kept my original profit levels, but I knew the risk of going for it all, and I'm still glad I profited some on this trade. So bulls do regain strength, and I see price picking up velocity on its way up. Usually at 2:50 Central Time, a large market on close order hits the tape and moves price pretty violently. Right before 2:50, I see some bullish divergence on AD, and seeing how strong buyers have been all afternoon, I decide to YOLO a market order buy at 39.9250. Normally I don't just enter trades off one indicator, but just went with my gut this time. The MOC orders are indeed net bullish, and price jumps up immediately. It moves so fast that the Ninja Trader DOMS lags for a bit, but I'm able to get my full 5-point scalp in just mere seconds. This probably is the quickest 5-point scalp I've ever had. Definitely a bit undisciplined with this trade, as it didn't meet my full criteria for entering, but I'm glad it worked out. Going forward, I probably won't be entering trades trying to predict the direction of MOC orders, unless there's very strong confluence from my indicators. I'm traveling again on Friday, so please bear with the janky recording setup. Bears have pushed price down into a demand zone, with stochastic RSI now at oversold levels. When I see price put in a higher low, I interpret this to mean that buyers are defending this demand zone and decide to go long at 39.71. I'm in this trade for a little longer than I want it to be, but with price never really dipping below my entry, I'm never in any danger, so I'm happy to let the trade run and eventually get the 5-point scalp I was looking for. During the day's downtrend, I noticed stochastic RSI creep back into overbought levels as price approached the 21 EMA. So I decided to take a step short at 39.48. After I get filled, price starts moving my way, but I noticed that there's actually some bullish divergence on the AD line. AD was making higher lows when price was making lower lows. Upon noticing this, I decided to lower my profit and loss levels since my confidence in a bigger move lowered. Thankfully, I'm able to scalp out for 3 points, but I make a note to myself that in the future I won't be taking trades if AD is against me. Here's the rest of the day's price action. We can see that the AD bullish divergence did indeed play out, as price started to rally during power hour. I think my 5-point scalp on trade 4 actually would have barely hit, but I'm so glad I exited the trade early, as I was right to get spooked out of a short trade here. After 2 days of making the right decisions, largely based on the accumulation distribution indicator, the account is now at $50,513, and our liquidation threshold is now a comfortable $2,200 away. I'm relieved to almost be out of the big hole I put myself in after that day of trading on tilt. Check out the linked video to see how that disaster unfolded. Going forward, I'll be implementing my risk management rule of stopping trading no matter what if I ever lose 2 trades in a row, to protect myself against the massive risk of future tilt trading. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe to see if we can keep this positive momentum going for next week.